Hey, welcome to Hub. We have an amazing show this week. As you may know, we have the Fed talking later this week about a nice little spike in the interest rates again. And Jeff's going to be talking about this, obviously, because this is big news. He also is going to show us one of the scariest charts he has ever seen. And he'll be sure to brief us on that as well. Jeff, how are you doing today? And what is your week looking like here in the market?
Hey, Brandon, I'm doing great. Had a nice weekend. Hope you did too. But we're off and running today with a market that's creeping higher. I'm just looking over here to my left to some other charts that I have up just to kind of see what's happening in the aftermarket hours. But right now, I'm on the screen. I have a chart of the Spider Index Trust (SPY), and you can see that we are in a nice little uptrend here. But as we previewed just a little bit, we have a big data week this week. So not only do we have the FED FOMC meeting, we're anticipating a 25 basis point hike. Believe it or not, this is one of the rare times I've seen 100% consensus in the everyone is guessing 25 basis points, and then there will be a pause. However, there's some things that are flowing underneath the surface that warrants keeping an eye on, where the Fed may feel the need to continue to hike. And we'll take a look at those here in just a moment. But let's go through the markets here. We have the Spider Index Trust, and there's really not much to say right now other than it's still in a very nice uptrend. You can see I have applied two moving averages here. One, the slower moving average in red is my 21 period, and my gold is the 161 period. And you can see they're both pointing upward. And the shorter term moving average, notice how far price is away from that. I would anticipate either a little bit of pause or a pullback down to that, and really no cause for concern in the near term, with the exception of, well, all the data we have coming out this week. I mean, it is earnings season. We have over 1,600 stocks or companies declaring earnings this week, just this week. And it's already started today. We've had several, and so far, so good. So Spider in an uptrend, not much to say here. The Dow setting some kind of record here with, believe it's 9 days. Let's see here. 1, 2, 3, 4, 5, 6. Well, I have 6 days of green candles all up, where we're closing higher on. Well, these are the diamonds, so you do have this one that looks like it doesn't count. But boy, the Dow has really taken off, broken out of that little wedge pattern that we saw here, has taken off higher. Now, the one problem I have here, as I've mentioned before, is this what we call angle of ascent. This vertical move that we have is really not sustainable. You know, when you get a move like that, we would like to see a move more like at a 45-degree angle, something like this. Okay, and when you go almost vertical like that, there's always a pullback. Now, I don't anticipate right now it being severe, but we'll see what these earnings do and what the forecasts are. It's a combination of not only the announcement and whether you hit or missed your estimates, but what your outlook is. All right, and that's also key with the Fed. When we start talking about that, it's yes, we got the 25 basis points, but what about the meeting notes? Okay, what's the outlook from the Fed? All right, so all this information. Now the Qs, they've pulled back a little bit. We had a very quiet day, but as you can see, they're just coming back to this short-term moving average for right now. Nothing too critical, especially if we hold 375 up here. That would be a nice little, just a little pullback. In fact, I'm going to zoom in on this a little bit because we have several months worth of data here, and I can zoom in here. And we'll take a look at, let me put up the Heiken Ashi, which I spent a lot of time with. And this is the one thing that kind of catches my attention. So we have on the Qs, we have these red candles that do not have any type of wick on the top of them. As I zoom in here, you can see that we had one day with a little bit of wick, but then these last 2 days have been indicating a solid push down. We'll keep an eye on this. Like I said, we hold 375, not going to be a big deal. What would happen is we would get a candle that, well, looks like maybe this green candle back here where you have wicks on the top and the bottom of them. Okay, these green and red candles back here. If we get one of those right here, that would indicate that the pullback for the Qs is over and we would be ready for a push higher. All right. Now, let me throw Elliott Wave on here real quick, see what kind of pattern we get. I was going to do that on the spider. Now, I'm not getting a reading on the Q. Oh, well, this is because I have Hike and a She up. Let me go back to candles here real quick, and we may get a little Elliott Wave count here, and we might not get them on the Qs, but I got them on spider. And let me jump back to spider real quick. I said there wasn't much to talk about on spider, and here I want to go backwards. Hang on one second here, as we need to refresh the screen, and it's going to come up with Google, and then I'll jump over to spider
I noticed that
real quick.
chart, Jeff, as you pull that up, that with the spider going up like that, the Dow going up like that so much, so quickly, with that pullback coming. Are you just sitting on your hands right now with those things right now, and also waiting until the FOMC meeting this Wednesday, or are you pulling any triggers just yet on those ones?
Well, I think what the key here is, as you'll notice, the beautiful wave count here, 1, and then a little pullback here on your 2 count, and then your 3. And so, a pullback here between 430 and 440 would be just a great opportunity for entry as you see wave 5. So we've been talking about a market pullback, but the immediate thing is if you have a portfolio of stocks that is quote unquote diversified and you're heading into a week like this with all these earnings, a good thing to do would be to collar your stocks, especially if they're optionable. Okay, meaning buy a put, sell a call, kind of put some protection on that, and then just ride through the storm. And if you don't know how to apply a collar, well, we're going to be talking a lot more about collars in the future here. So this is a good reason to stay hooked onto our channel as we talk about some of these other strategies that are protective and can also increase your rate of return. So I wanted to show you the Elliott Wave count on the SPY just because we have this beautiful pattern here. We have not started the wave 4 pullback yet, okay? But this is what I call the setup. Okay, this is a beautiful example. The setup, the signal, and the trigger. We don't have a signal to go short yet, okay, and we have not triggered to go short yet. That would be here in the next few days. I think by Wednesday or Thursday we could find some answers to that. Let me jump over here. We talked about the Dow. We talked about the NASDAQ. Let's talk about small caps for just a moment. Have the Elliott Wave count back on here. And you can see here that we show it completing a wave 5. Here's the thing about fifth waves and what I believe could happen here is if we get good outlooks from companies and it continues to push these markets higher, and specifically on the Russell, small caps, whatever their outlook is, if it's bullish, what you'll see is this wave count reset, okay? And the count will change. In other words, this 4 to 5 wave will become the 3 wave. That will be the biggest, most powerful wave. And that will happen when we break out above these new highs here and the extension gets above a 100% extension. And as you can see, we're at 86.07 right now. So that's something to watch out for right now. We're getting right up to some technical resistance on the Russell. But hey, the trend is up. If I throw the moving averages on here, you'll see we are way away from the short-term moving average. And again, that angle of ascent is somewhat concerning, but for right now, it is kind of the holding pattern. It's kind of a hold your breath, as we talked about a moment ago. Hold your breath. Let's see what happens with earnings. Let's see what happens with the Fed. This is the week. We've been talking about this for weeks, kind of coming up what could upset the markets, and it's now. This is the week that we've been kind of waiting for. So, and we're through one day of the 5 days. Okay, the last full trading week of July. Here we go. We could get some more fireworks to end out the month. Now, jumping over to some of the metals real quick, we have gold, which is GLD. We had this nice little pullback here. It found support at my long-term moving average, which is the 161. Remember that? It rallied up. Okay, I bet that's about a 38%. Bet that's about a 30%, 38% pullback. Let's see here. If we do that, oh, it's 50%. Okay, well, had a somewhat educated guess, 38 to 50. I should have said that. All right. And we could have a little ABC action here where we go from the high to the low. That's your A. We retrace this the B, and then the C sends us down a little further. All right. We won't know unless we break that 180 level. That's where I see some major support. We're at 180, 140 right now on gold. All right. So that's where I would anticipate some major support coming in at that 180 level, and I have a support line drawn there. All right, now for silver, it had really a bigger move today, down 100 basis points compared to gold, only down 43 basis points. Same story here. 22 is a level of support. That is where this lot of action is here on silver. As you can see, it's crossed above and below. So this has been support and it has been resistance. And they're just now filling one of the two gaps on silver, which is to be expected. Didn't know it would come this quick, but it's coming now. All right. And you'll notice here that let me get this little pin up. We filled this gap right here with this little run up. Okay. Now we have this gap to fill, and we have this gap to fill here. Now we'll see what happens when as we go through the week, kind of what happens with the dollar and what's happening with crude oil and the dollar and all those good things. So gold and silver are both pulling back just slightly. Let's talk about oil real quick. USO. Boy, this thing is just screaming higher right now. Gas prices rising just a little bit, crude oil rising a little bit. We are heading up into an area of resistance. That would be definitely at the 72.50 level. We're at 70.69 last trade. We are getting up there to that area of resistance. So the rally might run out of gas, but this is crude oil. I have an old colleague, friend of mine, very famous trader, named Trader Vic, who always says never short crude oil because some idiot somewhere in the world could cause some sort of action where crude oil, we get what's called spike oil. Okay. And it just run. Okay. He's either long or flat is something that he's always said. He's either long or flat of crude oil. And here, I've kind of backed off that a little bit because I trade much more short term, and I do have strict limits on my risk. So if I get caught short and the market moves higher, it's not going to hurt me too bad. But I understand his point. So we're getting up here near some significant resistance on USO. We'll watch for a trade opportunity there. Natural gas isn't doing much. It's at 7.25 right now. That's off its lows as it comes up. And this chart, let me zoom in here to get some real data. As you see, we're just pretty much moving sideways on UNG. It really needs to get above $8 to get any type of recognition from me as that we're coming off these lows, and we're at 7.25 now, but it's got to get up above 8 and close above 8 for me to kind of think there might be a rally in place on UNG. Now, let's talk about bonds for a moment. There's some news on bonds, and we're still in a inverted yield curve. Last I checked on Friday, we were at 98 basis points, I believe. And let's see here. Let's stay on me for just a second. I'm going to have to refresh this chart once again.
I mean, Jeff, all I'm hearing too, and is what I'm kind of wondering here is all I'm hearing is rally, 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 rally. Obviously, the street likes what the Fed's doing with this ahead of the FOMC meeting. Is this meeting going to be one of those sell the news type events? Is this going to be something you're going to be watching closely for that sell the news, especially where all these have rallied over the last couple of weeks? We're talking everything basically you just talked about, with the exception of natural gas, right?
Well, so far, everything that we've been looking at, right? We have the metals kind of pulling back, but everything stock related has been rallying. Here we see BND, which is the ETF that tracks the complete universe of bonds. It's pretty much stuck in a range right now. The range, as you see, I have a very wide range, but I'm specifically focused on really the past few weeks. I mean, well, 2 months probably. We did temporarily dip out, but we have been stuck here really between $72 and $73 on BND. And that may continue as that spread between the 2 and 10 year continues to remain around 100 basis points. Now, I have some other data points for you here in just a moment. Let's look at TLT. This would be the long end of the curve. This is the 20-year plus. We are traded. We broke this trend line, traded down to just below 100 at 99, rallied back up, and you could really argue that we hit our head on this trend line here, which, yeah, there we go. It's reset properly now. Dissecting this close right here. And that's what we did. We rallied up, bumped our head on this, and now we're kind of trading back down. You're going to see some difference here between TLT and SHY. SHY is the 1 to 3 year treasuries. But let's talk a moment. Well, I'll close out with the VIX, and then we'll kind of move on to some of our headlines here. But this type of move, when you see TLT down 36 basis points, SHY down 12, that would represent maybe a slight narrowing of that spread, but it is still hovering right around that 100 basis point. Let's finish with the VIX, and we'll talk about some of the economic things that I look at broader base that just kind of put up some flags on what we should be doing medium to long term. So here we have VIX. Man, look at all the red candles on this. It's amazing how every time, and this is typical of the VIX, when you get a spike in the VIX, you will have a pullback. The VIX is always tended, because it is measuring kind of fear and in the markets, and so it won't spend a lot of time above 25, I guess is what I'm trying to say. And right now it's having a hard time staying above 15, much less 1750, much less 20. I mean, it's really going to take something. Now it can happen like that. Okay, a lot of people will buy VXX down here. Look to for that to rally at some point, and that could be a longer term play. I wouldn't do it, say, on a 10-day trade, but I might do it on a 3-month trade, or maybe a 6-month trade. Go out and buy the 20 strike VXX options and just kind of see, if that comes in, depending on their pricing. You never know. All right, so but that is kind of a good long-term play. Maybe make a little bit of money out of volatility. So let's talk a little bit now about kind of the headlines that we have here related to the Fed. And one of the things that is looked at is, and this was a surprising statistic, is the number of listings, so of existing home sales continues to drop. Now, this is an interesting dynamic. You can have a lot of discussion about why. All right. But one of the reasons that we see now, my wife is a real estate agent. She, has a lot of insight into cycles and markets. And what we're seeing is, I remember her commenting, even as late as last year, that people were overpaying for homes. They were coming in with no appraisals, no warranties. I mean, they were just throwing money. Now people are afraid to list their homes because they are, well, either upside down or they haven't made any type of profit on their homes. So this is something that, nationally we could see a real problem with that could get extended out, okay, where people kind of got caught trying to get into a house and ended up paying a premium and now are kind of stuck. And you'll still have homes being listed, but the reasons will vary. They'll probably be because of transfer, maybe an elderly couple are downsizing, maybe a family's changing because of schools. There will always be listings, but not in the manner that we've seen them before and not in the numbers. Okay, so
Well, Jeff,
when we're looking at kind of the economic models, this is one little thing that we look at. Yeah, Brandon?
yeah, and I mean another thing that you learn alongside this is the locked-in effect, right? So many people got those low interest rates where they were 3, 4, 5% even during the COVID times.
Yeah.
And right now they're up at 7%. Who wants to sell one of those mortgages where you've locked in an interest rate at 3% only to turn around and have to refinance at 7%? It's just not going to happen. So a lot of people are locked into these mortgages now,
Yeah.
which is also increasing to this problem right here, limiting listings, because nobody's going to relist knowing that that's going to be the case for them. So huge, tons of variables at play here.
You're absolutely right. Now, for people that are a little older, per se, I mean, 7% doesn't really scare them away. But when we get up to 9, 10, especially double digits, that's when it's already hurting now, especially when you go from 3 to 7, as you're saying. But man, the mental effect, if we get up near double digits, that could have drastic effects. Now, this transitions us into the next slide. Let's talk about the headlines. Okay, and I love headlines. Okay, because it there's an old story I've told, and I've told it several times in the past few months, but real quick, it's about U.S. Steel, which is Signal X. Years ago, when I was running a hedge fund, I had a big position on U.S. Steel. And I woke up one morning to a headline that downgraded U.S. Steel. And that came at 5:30 in the morning. Then at 6:15, I had another headline from a different bank saying they reaffirmed hold on U.S. Steel. And then at 7:45 in the morning, as I'm driving into work, then I get another headline alert that a aggressive buy by a third bank on U.S. Steel. So in the same morning, within 4 hours of each other, I got a sell, a hold, and a buy on the same stock. All right, and so here you have national bank pricing over, okay, or regional bank, and investors think so, okay. So we could pull up KRE as that sector, right, and just see probably a little bit of rally, but then you have individual names like Truist, that is the headline below that, just saying, hey, their numbers really weren't matching up with some estimates. It's costs are rising. They've tightened up on their lending practices. Not as many people are taking out loans. Oh, by the way, where do people go to get their mortgages? Oh, they go to their banks usually. Okay. A lot of regional banks have a heavy concentration of real estate. They provide a lot of real estate loans, whether you're buying new, buying used, but pre-owned, okay, or maybe refinancing because you want to cash out and remodel, or something like that. So this headline is one that I love. Hey, confidence is coming back, but that's the but. There's individual names that could be suffering and not sure the full banking crisis. Well, we don't really have a banking crisis, but I think banks might start feeling the pressure a little bit more. Okay, with tighter lending practices, meaning people aren't spending the money or taking out the loans, that reduces the revenues, and that trend just continues. The final slide is the one that we headlined that just kind of really catches my attention. And well, sorry, second to the last, because I forgot. I actually was driving down the street and I tried to get a picture of it, but again, I was driving, and it was a Bank of the Ozarks regional bank, and it said 13 months, 5.5%. And I'm like, wow, okay, 13 months, 5.5%. Now, usually a CD has been one of the, well, it's been a reasonably safe place to go. Not so much in regional banks of late, but you get the idea. But now look where inflation is. We're being told that inflation is running now right at 3%. So all of a sudden, for what should be guaranteed dollar par value, meaning you put $1 in, you're going to get $1 out plus a little bit of interest, you can actually take a safe bet and outpace inflation. Now, to a trader or to a guy that's been around the financial markets for a long time, that is very unusual. Okay, and it means kind of strange, makes for a strange market. So we go to the next slide, you'll see this is where, yes, inflation is coming down, but so is money supply. Now, this is a chart, a 30-year look at M2, which is part of our monetary policy. M2 is kind of, look at it this way in very simplified terms. It's money and savings. Okay, it's available cash, savings, and everything that involves being able to purchase kind of goods and services. That's M2. Okay, M2 versus inflation. So look, everybody clap. Inflation is decreasing. The Fed should be nearing the end of raising. Wait a minute. What happened to all our money? Oh, we were using credit cards to pay for all this stuff. We were taking out loans, and we don't want to take loans anymore, and we can't get loans anymore. So all of a sudden, money supply, do you see anywhere other than maybe way back in the big 30, right at 30 years ago, where inflation was higher than M2? No. In fact, in history, the only time that inflation goes above M2 is during very challenging times. And not only that, but we have never dropped below 0 on M2. That is a kind of mind-blowing moment. This is where you look at these things and you're going, "Ooh, boy. Okay, things are looking good now." But remember, the market's always forward-looking. So it's reacting to what it saw 6 months ago, or it's kind of looking forward to maybe what's going to happen in the fall or spring. But now when we look at the spring into summer next year, we could see that rollover or that pullback. Okay, but again, put it in perspective. We're expecting a pullback on the S&P. Why? It's in a wave 3 uptrend. We could expect it to pull back. It's if it breaks that wave 4 area of support and drops even further, we could have a problem. In the end, this all leads to volatility. Okay. And boy, an earnings week is great for volatility. Okay. But it also gives us a lot of head fakes. And let's talk about some of the trades that we're looking at on an earnings basis. What I like to do is I don't mind trading through earnings announcements. They don't really scare me like they used to, because stocks typically will perform as they performed before. Usually, 3 out of the 4 quarters in a year, they will do what they've done in the past. Meaning, if a stock goes sideways and it doesn't move very much through an earnings announcement, then there's a likelihood it's not going to move a lot on the next earnings announcement. Maybe 1 out of 4 times it will gap a bunch or make a big move, but then the 3 other announcements, it'll stay within its range, or vice versa. 3 times it moves big, and then 1 time it doesn't. And this is kind of a cool thing to study and find out which stocks do what. And there is one particular stock that, well, I've just had a lot of fun trading with this, and that would be AT&T. All right. So we're going to pull up a chart of AT&T, and I don't need to put really any indicators on, but let me show you what back here, back in April, you see this little gap here. Okay. And what on earth could that possibly be? Well, yes, that's an earnings event. Okay. And I don't have my earnings little tag on here, but, going into it, notice how the stock consolidated a little bit. Okay. And then we got ready for the big announcement. Well, during this time, there is a delta neutral strategy. And by the way, we do a lot of delta neutral trading. Okay. There's many strategies that are considered delta neutral strategies. And one of the most basic strategies in delta neutral world is a straddle and or a strangle. Okay. This is where you buy a call and buy a put. It's one of the first strategies that you learn when you're learning about options. Unfortunately, people often don't pay attention to when is the right time to apply the strategy. And that is a problem. So, in my research, I happen to know how AT&T performs typically around earnings. So we put on a straddle back here in April, and sure enough, boom, big winner. Okay, big winner. Now we are faced with earnings again. Okay,
Hey, quick
now the
recap,
stock, believe it or
Jeff.
not.
Too.
Yeah, go
Hey,
ahead,
quick
Brandon.
recap.
Sorry, go ahead.
So I just want to be clear. A straddle, you want the stock to move one way or another, no matter what. Or is that correct? Or does it matter which way the stock moves as long as it moves a lot? Is that what we're looking for on a straddle?
There you go, the latter.
Okay.
Because the stock really moves 3 ways. It either moves up, down,
Right.
or sideways.
So we just want a big
Sideways,
move.
it's not moving
Yeah.
much. So we want a big
Okay.
move either up or down. And
Perfect.
absolutely. And that's where the decision of, should I do a straddle or should I do a strangle? Strangles typically are not as expensive as a straddle. Maybe that's the way to go. But what people fail to see is or understand is how much a stock has to move when they want to make money with a strangle. Same thing with a straddle. Is there a cost that's more expensive or too expensive? Well, it's all relative to the stock. So with AT&T, prices right now are pretty inexpensive, okay, and gives a good opportunity for a straddle to be an effective strategy going into this next earnings announcement. Okay, now on some other stocks, in fact, I saw a straddle price today on AT&T that was below $1, below $100. Now, that's pretty amazing. Okay. I saw another straddle that I liked just as much on a different company, and it was $2,000. Okay. Now, which one would you take? Would you take the one that's $2,000 or would you take the one that's $100? Well,
Dude, I want the
that
$100
is
one.
where, well,
that's me.
you would think. Okay. Now, in this case, you're right because I've already pointed it out. However, when I put those two examples up and don't give you kind of an idea, then people would often gravitate to the $100 one. Okay. Well, that doesn't always mean a better trade. All right. Actually, the reality is I like both of these trades. I like the $2,000 one and I like the $100 one. And guess what? They both have the potential to make about the same percentage return. That's the kicker. All right. So our trade for this week, we're going to be looking at AT&T. This has been a good friend. Now, it doesn't mean that it guarantees a winner. As I said, every 3 out of 4 times it'll do what you want it to do. Maybe this is that 4th time. Okay. But a straddle on AT&T. So tomorrow when you wake up and price is at $15, well, that is where you might want to put on the straddle. Earnings on AT&T are later this week. In fact, I have a trade that got put on today. I'll show you this with the 15s. Earnings are on they're in 2 days on the 26th before market open. All right, so here's an example of the straddle I was looking at, a $15. Look at that, 15 strike call and put. Okay, and it was 84 cents. Okay. Now, when I looked at this earlier, you can see prices have moved, and now it's going to be a little bit more expensive. Okay, it'll be more like 89 or 90 cents, still under that $100 mark. Okay, but essentially, we want AT&T to move. Move a few bucks. Okay, I want it to move. Let's just round these numbers. I want it to either move up above $16 or below $14, one of the two. Okay, and it can do that. All right, it dropped almost $2 last time. That doesn't seem like a lot, but this is a $15 stock. Okay, and this is an example of kind of where we would place the strikes in relation to dates and that sort of thing. But you can get this type of information by subscribing to some of our newsletters. In Delta Neutral Trader, we give trades like this. We give specific strikes and days to expiration and alerts and commentary while we're in the trade. Okay. This is just kind of something for you to look at and watch over the next few days as we go into earnings and kind of see what happens with AT&T. If you decide that you want to trade this, well, you'll be on your own. Okay, you'll have to make a decision on when to get out, or how to get out, or that sort of thing. But by subscribing to Delta Neutral Trader, we give you these exact instructions on when to do it and how to do it and why we're doing it. So anything that has come up, Brandon, in our session today, we covered a lot and got through it relatively quickly, but anything that comes to mind as we
Jeff, you explained that really well. I was going through that and I was following along very nicely. The way you paint a picture with the charts is something that I can't do myself. So having you do it for me really illustrates things correctly so I can see, oh man, that makes sense. And it's where you broke down this trade in particular, the AT&T trade, where you broke down exactly the price movement last time and that it moved so much, and we're anticipating the same type of price movement this time. The way you explained it made a lot of sense. But then my biggest question obviously was, how am I going to get out of this trade once I get in it? And you answered that too. Sign up over at ewotrader.com /DNT/trial. And what that's going to do is that's going to help you guys walk through these trades, both the entry and the exit. And it's a great job. Jeff will hold your hand through the whole process. It's just a slam dunk deal. And this is something that we all need to take advantage of. Gosh dang it, Jeff. You did a great job today. Thank you.
Thanks. Well, it was great being back today, and it's an exciting week. And when you are a subscriber, you get to join us on our Thursday night insiders meetings with myself and Rob Roy, and that's a lot of fun. And we will have a lot of updates for you on Thursday because we'll be past the Fed announcement, and we'll be almost all the way through all the earnings that we have this week. So it'll be great. So hope to see you guys there. But with that wraps it up for today, but we'll be back next Monday. Everybody have a great trading week, and we will see you again soon. Take care.